Welcome to SS2 Commerce. Today we study government revenue, focusing on taxes and levies, the primary means by which the Nigerian government finances public expenditure. Understanding taxation is essential for every Nigerian citizen and business person, as taxes affect prices, profits, and economic decisions. Government revenue is the income received by government from various sources to fund public expenditure, infrastructure, education, healthcare, defense, salaries of government workers, and debt servicing. Why government revenue matters? Without revenue, government cannot provide public goods and services. Adequate revenue enables government to invest in development. Tax policy affects economic behavior. High taxes on cigarettes reduce smoking, low taxes on investment attract businesses. Equitable taxation promotes fairness and social cohesion. Nigeria government revenue comes from two main sources, oil revenue and non-oil revenue. Oil revenue. Petroleum profit tax, PPT tax on profits of oil-producing companies. Royalties, payments for the right to extract crude oil. NNPC dividends, profits from Nigerian National Petroleum Company Limited. Signature bonuses, payments when oil blocks are allocated to companies. Oil revenue historically accounted for 70 to 80% of Nigeria's total revenue and 90% of export earnings. However, oil production decline, theft, oil bunkering, and price volatility have made diversification essential. By 2023, non-oil taxes were surpassing oil revenue for the first time. Non-oil revenue. Company income tax, CIT tax on business profits. Value-added tax, VAT consumption tax on goods and services. Personal income tax, PIT tax on individual earnings. Customs and excise duties, taxes on imported and exported goods. Stamp duties, tax on legal documents. Capital gains tax, CGT tax on profits from asset sales. Let us examine each major tax in detail. 1. Company income tax, CIT. Levied by FIRS, Federal Inland Revenue Service, on the profits of companies. Current rate, 30% for large companies, revenue above 100 million naira, 20% for medium companies, 25 to 100 million naira, 0% for small companies, revenue below 25 million naira, since Finance Act 2021. Collected by FIRS, distributed via Federation account. 2. Value-added tax, VAT. Consumption tax on the value added at each stage of production and distribution. Current rate, 7.5%, it increased from 5% by Finance Act 2020. Collected at point of sale by registered businesses, remitted to FIRS. Shared, 15% federal government, 50% states, 35% local governments. Exemptions, basic food items, medical supplies, educational materials. 3. Personal income tax, PIT. Tax on income of individuals. Collected by State Boards of Internal Revenue for residents. PAYE, pay as you earn. Employers deduct tax monthly from employee salaries and remit to government. Progressive structure in Nigeria. First 300,000 naira, 7%. Next 300,000 naira, 11%. Next 500,000 naira, 15%. Next 500,000 naira, 19%. Next 1,600,000 naira, 21%. Above 3,200,000 naira, 24%. Minimum wage earners are effectively not taxed due to reliefs. 4. Customs and excise duties. Import duty, tax on goods brought into Nigeria, rates vary by product category, 0% for essential raw materials to 35% for luxury goods. Excise duty, tax on goods manufactured domestically, especially tobacco, alcohol, sugar-sweetened beverages. Collected by Nigeria Customs Service, NCS, at ports of entry. 5. Withholding tax, WAT. Tax deducted at source from payments made to service providers, contractors, dividend payments. Rates, 5 to 10% depending on type of payment. Recipient uses WHT credit to offset CIT liability. Beyond formal taxes, government also collects fees for government services, passport, vehicle registration, court fees, fines, penalties for traffic violations, building regulation breaches, levies, market levies, development levy, tenement rates, property tax by LGAs, rent from government properties, dividends from government-owned enterprises, grants from international organizations and foreign governments. Tax collection is divided among 3 tiers of government. Federal taxes, collected by FERS, Federal Inland Revenue Service. Company income tax, VAT, petroleum profit tax, education tax, stamp duties. State taxes, collected by State Internal Revenue Services, SERS. Personal income tax, road taxes, property tax, in some states, entertainment tax. Local government levies, collected by LGA councils. Market levies, development levies, billboard fees, slaughterhouse levies. Nigeria faces significant tax revenue challenges. 1. Low tax to GDP ratio. Nigeria tax to GDP ratio is about 10%, one of the lowest in the world. Global average is about 20 to 25%. This limits government spending on development. 2. Large informal sector. 65% or more of economic activity is informal, not captured by tax authorities. 3. Tax evasion and avoidance. Businesses underdeclare profits, wealthy individuals hide income. 4. Multiple taxation. Businesses face tax demands from federal, state, and local government, sometimes paying same thing multiple times. 5. Corruption in tax administration. Tax officials sometimes collude with taxpayers to reduce assessed tax in exchange for bribes. Nigeria has enacted Finance Acts in 2019, 2020, 2021, 2022, and 2023 to update the tax system. Finance Act 2019 extended VAT to digital services, exempted small companies from CIT. Finance Act 2020 raised VAT from 5 to 7.5%, introduced stamp duty on bank transfers. Finance Act 2021 created graduated CIT, 0% small, 20% medium, 30% large companies. First e-filing, online tax filing system to reduce compliance burden. National Tax Policy 2017 aimed to make tax system simpler, fairer, and more efficient. Summary of government revenue, taxes and levies. Government revenue, oil revenue, PPT, royalties, NMPC, plus non-oil, CIT, VAT, PIT, customs. Company income tax, CIT 0% small, 20% medium, 30% large companies, collected by FERS. VAT, 7.5% on goods and services, exempts basic food, medicine, education, shared 15% FG/50% state/35% LGs. Personal income tax, progressive 7 to 24%, PAYE system, collected by states. Customs duties, collected by NCS at ports, import duty varies by product. Challenges, low tax to GDP ratio, 10%, large informal sector, evasion, multiple taxation. Finance Acts 2019 to 2023 modernizing the tax system.